Welcome back, everyone, to day one of the Digital Disruptors Week. Join us as we dive into the next session, which is a fintech showcase entitled Malaysia, a place for fintechs and a hidden gem in Southeast Asia. Please welcome Gopi Ganesalingam, the Vice President, Tech Ecosystems and Globalisation, Chee, from the Malaysia Digital Economy Corporation, MDEC, to introduce the lineup of extraordinary speakers that is up next in our agenda today. Over to you, Gopi.
Good afternoon, ladies and gentlemen, and welcome back to MTN. It's time for our FinTech Showcase. With a buzzing tech ecosystem and a diverse, multilingual population, Malaysia is the perfect place for global FinTechs looking to penetrate the Southeast Asian market. In our increasingly cashless world of neobanks and e-wallets, Malaysia has become a hotspot for both regional and global FinTech companies for setting up their base in Malaysia, not just to access substantial domestic market, which boasts a population of more than 32 million, but also to establish their presence in Southeast Asia, the fastest growing internet economy in the world with a population of over 600 million. This year, the capital of Kuala Lumpur shot up by 11 places in the global FinTech rankings, which is a testament to the country's conducive environment for FinTech companies looking for a gateway to ASEAN. From a social and diversity view, Malaysia is well known for being a multicultural and multilingual country. The country is home to speakers of 137 languages, including major languages English, Mandarin, Malay, and Tamil. And let's not forget the delicious food that comes with this. This diversity also lends itself to a wide pool of talent with different backgrounds and experiences, making Malaysia a microcosm of the larger ASEAN market. Ladies and gentlemen, in this segment, we will start off with a panel, Malaysia, a place for fintechs in Southeast Asia, which is moderated by Syakir, Vice Chairman of the MDEC, who will be talking to Justin from Paid, Ian from Ablr, and Fumiko from Informatica, fintech founders who will help us understand why they chose Malaysia. This will be followed by presentations by Wahid Invest, MoneyLion, 1982 Ventures, who will share their unique experiences in Malaysia. Wahid Invest will share on why they chose Malaysia to open an office here. MoneyLion, a New York-based company and an emerging unicorn, will share on the evolution of their AI team in Kuala Lumpur. 1982 Ventures, a VC firm focused on investing in early-stage fintech startups in ASEAN. Ladies and gentlemen, with an impressive list of global fintech disruptors, you will enjoy the panel session. Also, please do join the networking lounges to further connect with the companies after their respective presentations. Thank you very much, and over to the organizer.
All right, good afternoon, everyone. Welcome to the Malaysia Tech Week. Malaysian Tech Month, right? And this afternoon we have a pretty fantastic mix of panelists with us, right? To mainly talking about their journey of building their respective fintech startups in Malaysia, right? And particularly from the lens of founders, we will discover where why they have chosen Malaysia as their beachhead market or the next market for extension, especially in fintech, right? And let me welcome our panelists, starting with Fumiko Inada, founder of Informatica. Hello, good afternoon.
Hello.
Right, and then we have Ian Au of Ablr.
Hi.
Hi, and last but not least, Justin Kong from Paid.
Hi everyone.
Right, I think let me just quickly kickstart with a quick intro, asking for a quick introduction about yourself and the company, what you guys do, and all that. Perhaps maybe Fumiko, you want to actually share with the audience, what is Informatica about?
Okay, sure. Thank you, Syakir. So we doing Informatica, offering the platform for digital microfinance. Basically, we focus the micro SMEs, the business loan at this moment, and especially our target, our loan size is 6 to 40K ringgit at this moment. So we try to solving the issue for the SME couldn't get the traditional loan from the banks. So we try to use a different new type of assessment process we call the psychometric test, then to try to open more opportunity for the SMEs.
All right. Thanks. We'll come back to you, Fumiko, because you have a pretty interesting background. But over to Ian, what about you, Ablr?
Yeah, thank you, Syakir. The Malaysia Digital Economy Corporation, my fellow panelists, Fumiko and Justin, and everyone tuning in for allowing me the opportunity to share. My name is Ian, and I'm the founder and CEO of Ablr. So Ablr is a platform that enables merchants to allow consumers to pay for goods and services over time in a way that helps increase conversions and accelerate revenues. So it's our mission to humanize financial services, having taken an empathy-led approach. We have made it a point not to benefit when consumers fail, and as such, have built in policies since the start of the business where we do not charge any late fees or interest. So we believe people want to be timely with their commitments and that we just have to help and enable them to achieve that. So we have a focus on providing access in ways that improve people's lives. And this includes enabling work and productivity, helping people build homes and families, providing more affordable access to education and advancing people's well-being. Yeah.
Thanks, Ian. Justin, floor is yours.
Oh, thanks, Syakir. Well, I'm Justin. I'm the CEO and co-founder of Paid. We are a financial well-being employee benefit that provides affordable funds to those who need it the most. So we work with employers to allow their employees to withdraw their earned salary from their next paycheck. We charge 10 ringgit a withdrawal, irrespective of the amount. So an employee can actually have access to up to 2,000 ringgit for 10 ringgit. There's no such thing as interest, so no such thing as late fees. There are many benefits for the employer, including things like reduction in turnover and improvements in productivity. Just 2 weeks ago, for example, AKPK conducted a study and they showed that 65% of Malaysians reported that financial stress has affected their job performance, and bad financial being leads to poor financial health. So by looking for after employee financial well-being, employers have noticed increase in productivity as well as a reduction in turnover.
All right, thanks, everyone. Right, so I guess let me kickstart with Fumiko, yeah, because again, as I mentioned earlier, coming all the way from Japan, and you have been in the country for a while already, yeah. So tell us more about the background story. Personally as a founder, how did you eventually ended up in Malaysia, and why Malaysia?
Oh, okay, got it. Basically, I started my professional career in Japan for almost 9-10 years. I working in the banks and also the business consulting, especially in financial sector. So after that, I have a dream when I was a university student. I want to work in an emerging country, and my keywords is microfinance. After the 2006, Dr. Yunus got the Nobel Peace Awards. Then after higher study in UK 2 years, then I decided to go to Bangladesh to study more about the microfinance. Because of Dr. Yunus start the Grameen Bank in Bangladesh, it's already had 40 years experience in microfinance. So I want to know more about it. Then I work in the BRAC, it's another famous microfinance institution in Bangladesh, also working in Japanese foundation as a business consultant to start supporting the Japanese company to creating social business. Then I coincidentally met the current co-founder. He's a Bangladesh background, and then he has an IT background. So we found that we have a similar mission to creating a social business using the fintech as a solution tools. So then we discussed, and at that time we focused on the Bangladesh migrant worker in overseas. Then after researching, we found that Malaysia is a big country as to accommodating a lot of migrant worker. 5 to 6 million people working in here. So we came here 2018, then start to the remittance business for migrant worker. But after 1 year, we found it a little bit challenging to acquire the license, remittance license from Bank Negara. It's really competitive, already saturated market. So then after 1 year, then we decided to shift our business to microfinance in the digital. And then authority ministry is KPKT, so not from Bank Negara. So it sounds a little bit more easy to acquire the license than Bank Negara. So then we finally acquired license last year, so we successfully to start the operation this year. So those are the backgrounds. On top of that, not only the migrant worker, but also why we choose Malaysia is some of the digital infrastructure environment. So it's in this Southeast Asia or in Asia, Malaysia is a good destination to this environment, to internet penetration rates, also smartphone rates are high, and also the population size, 30 million is middle enough and good enough to start with. And also the average age of population is 29 years old, and it's quite young, and maybe IT literacy is slightly high. So we recognize this country as a good starting points to the fintech startup at the beginning. So that's the reason, the backgrounds came here.
Cool. And Ian, over to you, right? Perhaps, let me also ask what's the footprint of Ablr, because you guys have operation in Singapore, right, and Malaysia. Between the two countries, what's the business volume?
Yeah, so Ablr had its start in Singapore in 2017. So it's been about 4 years now, and we expanded into Malaysia in 2020. So we started off with a few successful pilots of our service with a select group of businesses from our investors network in Malaysia, and that helped us build a few merchant success stories. So we are now actively onboarding merchants who have been referred by existing merchants, and this gives us a pipeline of merchants and partners we are integrating with now to provide wider access to Ablr. So with Malaysia as a success story, we are now currently in talks with other strategic investors as well as partners to expand our footprint further in the region. Yeah.
All right. And how about you, Justin? Where does Pate stand in terms of the market expansion or whatnot? Did you start in Singapore, or Malaysia is being picked as the beachhead market?
So Malaysia definitely the beachhead. We did start in Singapore, but our background was we came through an accelerator called Antler. So it's a global fund. We came through the program here in Singapore. So just because of convenience mainly, we started doing our pilots out here in Singapore. That was kind of earlier in the year, but Malaysia was always going to be our core focus for us. So we developed the tech, went to market, learned a lot, and we've just set up in Malaysia. So I mean, Malaysia for a few reasons, right? Like it's got the second highest level of mobile penetration in Southeast Asia. I think there's like a good maturity of using financial products, and there's also a drive from Bank Negara to drive progress in banking and payments, which would help the fintech network. For our particular business, we know that 46% Malaysians live paycheck to paycheck. There is a clear lack of savings. I think the stat is over 50% don't have enough savings to last more than 3 months if they were to become unemployed. And there's just limited access to credit. So 52% of Malaysians said that they would struggle to raise 1,000 ringgit, which is less than minimum wage if they needed it in terms of an emergency. Financial literacy is also a huge issue. I think 30% of Malaysians say that they're not in control of their finances, and COVID has just made the problem worse, right? So I think the Department of Statistics just came out and said household income has fallen by over 11%, and that's as of 2020. I think the problem is all worse right now. And it's also brought into financial well-being into the spotlight. So it's quite important for us, and we see that in sales calls, like employers are much more aware and much more focused around looking after their employees' financial well-being. just on a personal level anyway, Malaysia is my home. So when I want to build a company, it makes a positive impact on all Malaysians.
All right, cool. I think, you know, there's a common theme here where as we dig deeper into, you know, the businesses or whatnot, right? Just about all of you have one way or another looked at, you know, the opportunity of financial inclusion to some extent, right? Access to credit, you know, and if I am correct, Ian, for instance, you didn't mention about the common well, abbreviation that is so hot these days, right? Buy now, pay later, which essentially is what Ablr is, right? So I think, you know, in the course of your introduction and all that, there's one common thing that I picked up, especially from Justin and Ian, right? It's about, you know, the what you call not behaving to be a predatory, you know, kind of lender or that sort, right? With well, taking care of the social impact and all that. Well, I think perhaps, you know, I could get every one of you, right? If you want to chip in to just discuss a little bit how prominent is, you know, this issue of ESG, right? Environmental, social, and governance, especially in the social aspect, right? Which came out in our discussion here. You know, how important it is in your conversation with investors, for instance. You know, I presume all of you would have already had some form of a discussion or conversation with investors in the market. Do that kind of theme come up in your fundraising or engagement with them? Yeah, maybe I'll start with Ian. Maybe.
Sure. Happy to take that first. So I would say that the topic of ESG doesn't actually come out so often with the investors. But what I think is really important is that we have made this a part of our mission, right? So our mission to humanize financial services, to create honest financial products, and this is the part that leads to the ESG, which is that help improve people's lives, right? So we want the extension of credit to actually positively impact people, which is why there are some focus elements in which, you know, we want to extend it in ways such that we enable work and productivity, help people build their homes, provide more affordable access to education, and advancing their well-being. So that's the focus, and we see that again, not because, you know, investors want or are interested in ESG, but more from the perspective that when you are able to help the people, when you focus on them, and when you provide access in ways that are sustainable, then I think, you know, that would create a sustainable business in that sense. Cool.
Justin?
Yeah, I mean, for me, to be completely honest, it's some more than others. You know, for one extreme example is we do have an investor whose, you know, family went through the same situation, you know, struggled paycheck to paycheck. I think his parents, he remembers the time when he was young, when he could see his mother crying because she was, you know, she struggled to put food on the table, had to borrow money from her sister, right? So it's like kind of losing faith in the culture and things like that. So that's one example of people who like really care from an investor's perspective. I think just on a more general theme, like the fact that we do have, you know, an approach or focus on trying to be socially responsible tells people that we're here for the long term. And I think that makes a difference as well. So, you know, we're trying to solve a problem that has existed in a long period of time. Maybe 10 years ago, payday lending in the UK and the US, for example, was really, really big. It wasn't done properly. You know, a lot of people were driven to bankruptcy, but we're trying to solve the same problem just more responsibly. So, you know, a lot of those big players way back then don't exist anymore because, you know, they went through regulation, they had fines and so on, and it was just unethical business practices, right? So it is important for investors to know that we've got a sustainable model. Cool.
Fumiko, you got inspired by you know, the Dr. Yunus, right?
Right.
So I'm sure you have a couple of things to share as well.
Right. Yeah. Originally, why I going to Bangladesh is exactly the want to know more about the microfinance. Microfinance itself is completely social business to begin with, to alleviate the poverty. Right after the independence from Pakistan, then they are very, very poor, to suffer the famines, and those are the context that they started the microfinance. So exactly, not only economic impact, but also the social impact to helping the women, especially women in village side. There is no solution to earn the money, and so those strong backgrounds as a social business. But here now, this current year and time, and especially we are working on in Malaysia, so completely very different context from the Bangladesh. So, but we try to making a hybrid system. It's some philosophy come from traditional model, and some technology side is combined with the current business and current trend of the business startup. So we especially we really still the focus women, and also the social impact for the increment household, especially the negative impact from the COVID. So we want to support especially women to start something new business in India, starting from home. Is this kind of exactly the creating the social impact, not only economic, but also we focused in mixed with the new tools, like we focused the psychometric test and to creating the new impact for the economic and social, and to try to open the opportunity for new type of assessment to use the different data source. And so it's yeah, exactly both impact for the social as well, and to open the opportunity for micro SMEs, also the ESG target for the open for SME, the open opportunity for SME itself, it's the SDG goals, and then also women, also both. So yeah, eventually exactly to completely fit with the ESG point, and yeah, it's lucky for us, and to the trend is coming to the worldwide, and even in Japan also now they really, how can I say, the boom for the impact investment. So it's really
awesome, awesome, interesting. You know, hold that thought, because I think that's another theme that came out that I want to, you know, discuss with everyone here, right? Is the scoring and the data or whatnot. But I want to continue with the conversation with investor, you know, before we kind of drifted away. You know, now I think, you see, Southeast Asia these days is really catching a lot of attention. Yeah, particularly, you know, outside of America. You know, we have been talking about, okay, the next big market, China, right? In fact, it kind of even to the extent of even overtaking, you know, has the potential of overtaking the Silicon Valley or whatnot. But of course, the government over there has taken a different stance recently, right? But now then that brings us to this region, Southeast Asia. Now, not being in the largest economy, right? The archipelago, right? Indonesia. Would that kind of inhibit any form of a conversation in terms of fundraising or whatnot? What's your experience so far? Anyone wants to kind of jump in? You know, when it comes to fundraising, talking to investors.
Yeah, I'm happy to go first. You know, I think we've spoken to maybe too many investors by now, and it is a theme that has come up a few times. So I've had a few investors who said, you know, really love the model, really love the idea, really love where you're going, love everything about it, except I'm not convinced about Malaysia as a core market. Like, and the question is, like, why don't you choose to do Indonesia first, or Vietnam or Philippines, where the populations are, you know, double, triple, or more than Malaysia, right? But typically these are international investors who don't have investment or footprint, or, you know, don't have a mandate to invest in Malaysia. It's hit or miss. Like, some don't mind, some really like Malaysia, but some only, for example, like Indonesia, you know, especially those who don't have such local experiences and more foreign investment teams. So I don't think it's an issue, like, to be part of Malaysia, as long as you kind of have a plan anyway to expand regionally. I think that's something that they like to hear.
Right. Ian, Fumiko, anything to chip in?
Yeah, I'm happy to share as well, right? I mean, we're sort of in the midst of completing our raise, and we'll be making our relevant announcement soon. So with regards to, having spoken to all these investors, I think one point that I'd like to share is that, to crystallize value for investors and their investment, I believe that while market presence is an area of interest for many of them in terms of the opportunities for the creation of value based on the size of the market, being able to capture that value is even more crucial to achieving that goal for them. So it's not just about the size of the market, but being able to capture the value from it's not about value creation, but also value capture, right? So as discussed, yeah, like we're speaking with most of our investors, we feel that it's also about the fit between the product as well as the readiness of the market. In being able to provide that confidence and conviction of whether or not we are able to capture the value that's being created and whether the investors believe that we are able to do that. And we are just very thankful that, at least with our current group of investors and those that we are in talks with, they have focused on this, our ability to execute and our clear market expansion roadmap. So that I feel, has been the highlight and the focus rather than just the size of the market. Yeah.
Right, and Fumiko, from your end, I happen to have a quick conversation, with you earlier on, and understand that you do have a couple of Japanese investors, on your cap table, and also, recently I read about Japan as a country has probably the largest investment in infrastructure across Southeast Asia. Yeah. So do you see the same sentiment in terms of interest when it comes to fintech, when it comes to tech companies in this region from your counterpart in Japan?
Yeah, definitely. Overall, yeah, exactly. Not so many investors know about Malaysia itself, but overall, Southeast Asia, they recognize as a very emerging and dynamic economy right now. So compared with Japan, most of the country have a bigger GDP growth and overall 5 or 7 or etc. So they feel the very focus as an investment destiny as a Southeast Asia itself. So it is really welcoming information for us. But on the other hand, I still find some of the investors, the VCs, they don't have any platform to focus, not yet for the Malaysia itself, or they look for more bigger destination like India or Bangladesh or Vietnam, or bigger populations. But I believe as for the focus, the social impact to begin with, they really welcome to start with any country, including Malaysia, to making a success story from here. Then we can go for the next country as in different area in bigger population. It can be the good strategy for them. So most of the investor doesn't want to finish and complete it not only one country, but also as Southeast Asia or Asia itself. They want to seek for us to expand the market. It's the more dynamically. That's satisfied their investment vision as well.
All right. Well, good to hear that. Right. Now I'd like to circle back to the point of data and its scoring and all that, right? Because all of you are involved in some form of extension of credit or payment, as an alternative payment and all that. So I'd like to kind of just quickly, touch on, how you guys are making that kind of credit assessment, because, you are targeting a different segment, right? Predominantly guys who have got a thin credit file, so to speak, right? And where are you going to get all this information to be able to empower you to make, financial services that you are offering to the target demographic that you have, right? Who would like? who would like to go ahead? Fumiko, go ahead.
Okay, thank you so much. Yeah, as I briefly mentioned before, we target to use the data as an alternative data. So currently we recognize several alternative data already in the world. And so first is psychometric and as a characteristic analysis. So everybody already have a character. So it's easy to access that data. Also, another one is we have smartphone data. The data, the behavioral pattern in the trace in the traffic, in the smartphone itself. So that is the second options. So we seek for now considering for both, but as for the psychometric is more easier because everybody already have, and then through 10 minutes, the easy question, psychometric questions, we easily to acquire the data itself from borrower. So we begin with the getting this data from the borrower using the psychometric test. Then we use the vendor, that's Malaysian vendor, who creating the professional test or psychometric test. So we luckily to find them. So we collaborate with them and to use their test data, and then we acquire the data by ourselves. But at the same moment, we use maybe the Singaporean vendor who have an engine to create analysis for the smartphone data itself. So we now considering to collaborate with them as well to acquire the smartphone data as a behavioral pattern.
Got it. Justin, anything that you would like to share?
Well, for us, anyway, our business model generally, credit risk lies with the employer, right? So if you think about our solution, we're really shifting the credit risk from an employee to an employer, which is why we can, charge extremely affordable fees for access. I mean, we do it quite simply in terms of, getting credit checks and credit monitoring. We have inbuilt flags as well into the system, which tells us, say, if an employer is at a higher risk based on, transactions that have happened historically. At an individual level, we do, part of our solution as well is, budgeting. So, to help people budget their expenses, we know exactly what they need money for, whether they're short on certain days and for what. And we are capturing all that data, but mainly for, when we do release our future products.
All right, and Ian.
Happy to share more about this as well, right? So I think from us, I would like to approach it more from a structural perspective. So what that means is that we actually look at 3 buckets of data. You have identity data, you have credit data, as well as transaction data, right? So regardless of which country or which demographic you're looking at, you'll be able to get this source of data in one form or another, whether it's traditional data or it's alternative data. And for us, we don't use either or, we use both of them as a combination, right? And you talked about people who are, maybe with thin file or unfiled. So we have built a platform such that, as our name, Ablr, comes from the word enabler, to be able to enable these consumers to get access to this, regardless of whether they are unfiled, thin filed, or have an existing file with traditional institutions. Yeah. So we have built it in that manner. Yeah.
All right. I think the common theme here is really about using data in various form, and basically just synthesize it and utilize it for any of your financial decisions, in this case, because I'd like to probably just quickly touch on this recent case, right, that happens to fintech unicorn listed already, Lemonade, right, potentially facing a class action in the States where they accumulate in the process and store information of consumer doing their submitting their video recording and not disclosing the real intent. They are using the video feed to actually capture some behavioral information, right, that is not obvious, and using AI and then try to do a bit of fraud detection, and they did not disclose that usage to the user and end up some quarters of people, the consumers are gathering, they are building up a case against the company. Now, do you guys foresee that this sort of personal data protection is going to be a major risk here, especially when you're operating in Malaysia? And have you guys really kind of built some system or processes around it and have the understanding of the requirements over here, how easy it is for you guys to make sure that you comply to those things? Who wants to take it?
Yeah, happy to take that first, right?
Okay.
So,
right.
Yeah, in terms of that, I think what we look at is that there's a balance between providing more access to personal data and being able to use that to provide more useful solutions and services to consumers. So consumers actually want to provide data to get access to these services. So how do you do this in a responsible manner? That's the next question. So when we enter into the market, for example, Malaysia, we will always do this in consultation with the regulators as well as our lawyers, in structuring it such that we are in compliance with local laws and that the consumer's data is protected in that sense. And when we do take data, we clearly inform them that we are and we get their consent for that data. Yeah.
Right.
Yeah. For us as well, I feel that, because we employers as well are our clients as well as employees, they're caring more and more about data protection and employees' consent. So you have to make sure that all the things are in place and work closely with lawyers and regulators like Ian mentioned to make sure that everything you do is above board. For us, it's not capturing every single piece of data as we possibly can to store it, because sometimes there is danger to that as well. So it could be a barrier to scale. For example, the more you capture, the more questions that you get, the harder it is to sell. It's just one example, right? So we try to capture as little data as possible to start off with. And if the consumer wants to share it with us, it's very clear within the terms and conditions what it is that we capture and what we use it for.
Right. And Fumiko,
yeah,
insights?
we also try to follow in the authorities' demands to protecting data itself. So the new digital license require the video consensus and to explain in video, and also to get the consensus from video from the clients as well. So we really carefully to focus on this treating the data itself. And also we try to never use this data as individual data, personal data, but remove as a personality, then we utilize to analysis as a data as for our database analysis. And so try to use without personal information, then to treat as the pure data and to analysis for the democratic data itself.
Okay. I think I like to move on to another topic, which is pretty common these days, right? Talent acquisition, right? I think is a real issue for founders across the board. It doesn't really matter where you are, right? I've been hearing stories about because of the pandemic, because of the economic downturn, most governments are taking a bit of a protective stance in terms of trying to ensure that the locals are hired or whatnot, and so much so that is causing a bit of an issue even in Singapore and potentially in Malaysia also. I like to hear you guys talk about it as well. Has there been a real problem for you, in terms of hiring the right talent, right? Especially the tech talent, right? And how do you overcome them? And would Malaysia give you a good source of people that can help you to build your company? Yeah. Maybe I'll start with Justin.
Yeah. I mean, to be completely honest, very hard, right? So when we got our CTO on board, we must have interviewed more than 60 people for the role, which is like from all over the world, really. Very, very hard. Now we are actually actively hiring developers with a preference on hiring them in Malaysia, but it's proving very difficult, right? So I think the tech talent in Malaysia compared to other parts, so maybe like Vietnam, Indonesia, maybe slightly better Indonesia over the last 5 years, I feel like tech talent's gotten a lot better, especially with the new unicorns there and that kind of experience. In Malaysia, honestly, it is a bit difficult for us. And we are still actively looking, but they're few and hard between, I think.
All right. Well, maybe I'll kind of have Fumiko to come in and describe a little bit as well, because you yourself is a foreigner, right? And how did you get in here and be able to kind of and start? And is there any policy that will help you to even eventually bring in foreign talent and come in here? Do we have any policy here to help with that?
I don't address any policy yet, but overall, basically Malaysia is a welcome country to accepting the foreign talent, especially before previous government, right? So we find that several foreign talent is still remaining here, and also especially for engineer. But in our case, it's slightly different. I started the co-founder already. He's a CTO. So he's based in Dhaka right now. So our IT team in Bangladesh, all of them. But as for another talent like marketing team, operation team, or finance team, we expected, of course, from here in Malaysia because all the clients operation site in Malaysia. But now, before acquisition of finance, so we don't have any full-time assistant yet. So we have a part-time assistant right now.
Okay.
Yeah, one is from Malaysian, then he studied abroad and come back here, then to do the legal and IT job. So he's really talented, and also somebody is doing assistant. He's Indonesian but study in Malaysia. So luckily we met in some site through the site group. Then he applied for us. Then we hire him as a part-time. And so overall, and also we previously have hiring the UI UX designer. Then I found that Malaysia have good at strengths for the design part. I heard about it, and also actually her talent is amazing. I mean, we really appreciated her contribution. So I think every country have a different strengths and as a talent. Then we recognize here as we try to find the finance backgrounds, also the design backgrounds, and then we seek for the IT backgrounds in a different destination actually. But of course, obviously, we next target after financing, we will try to find the manager level from here in this market.
Right, Ian. What about you?
Right. Yeah, I think there are two aspects of that that we look at it from. So one of them is the supply and capacity in Malaysia, right? So I understand that with MDEC, they have various initiatives that actually upskill people to acquire digital skills and things like that to increase their employability. So there's actually a very big supply of very talented individuals that Fumiko had just mentioned just now in Malaysia and things like that. So that being that, and then the community, the fintech community, through, for example, the Fintech Association of Malaysia expands the access to being able to network and get referrals and people that are actually looking for jobs as well. So that's also another part that helps with the supply and the capacity. And now, of course, the other aspect of it is really, how is the company able to attract talent to want to join you, right? So one of my favorite books is Principles by Ray Dalio. Not sure whether you have read that book, but so the summary of it really is about building meaningful relationships, doing meaningful work, and doing that with radical transparency. So I think that really is what our culture is about, and we put it straight to people, who are looking that, when they join Ablr, that's how we operate, and that's what we want to do. Yeah.
All right, interesting. So, okay, I think perhaps, in the last couple of minutes, right, let me just perhaps get everyone to provide your perspective, right? Say, what would be your advice to any founders who are looking at potentially, having Malaysia as the next market, or even the beachhead market, like Justin, right? And even Ian for your case. Especially when it comes to fintech, right? What would be your advice? Where do they go to? What's the first port of call, right? And judging from from your experience, Ian.
Yeah, sure. I think we're lucky to have one of our investors being in Malaysia, so they were able to make some kind introductions to that. But I believe a few port of calls for investors could be, for people that are looking to expand their business to Malaysia would be MDEC, Malaysia Digital Economy Corporation, as well as Fintech Association Malaysia. Yeah, so they have a great team and committee in both of these organizations. They have been very helpful with us in both, setting up, understanding the market, and being able to support us in areas in which we require support in to actually build the business. Yeah.
Right. And Justin, what has been your experience? What did you do?
Yeah, for us, we have a good base of Malaysian investors as well who really want to help us bring the product to market. I think that's been extremely helpful. MDEC as well have been very helpful to us. So maybe special shout out to Bala, who's been particularly helpful to me. So any issues that I may have or advice that I may need, for example, with regards to fundraising or maybe even regulation and stuff. They've been very helpful in terms of connecting me with the right people to do that. Another thing is we're part of the Endeavour Scale Up program, which is the one that's based in Malaysia. And that is something else that have been extremely helpful to us in order to gain access. So I think there's a lot of these different areas and organizations which could help you get a foothold in Malaysia and go to market or with whatever help that you may need. And that's been very good to us so far. Right.
And Fumiko, any additional stuff that you want to share?
Yeah, I also appreciated the MDEC and also the Bank Negara, a lot of authorities giving us the opportunity as supporting a startup, especially MDEC give us the financial matching program to meet up with the investors in Malaysia, and also the Bank Negara give us the accelerator program. And 2 years ago, I joined as alpha program between Bank Negara and 1237 and to creating the fintech network, and also have a pitch presentation opportunity in Bank Negara in fintech events. So those are the fantastic for us as a foreigner and to penetrate in this market, and also the network, creating a network to know the more information exactly.
Okay. I think perhaps the final area I want to touch upon is, of course, fundraising. Yeah. So well, I guess everyone is fundraising all the time. Yeah. So I'm just trying to kind of do a bit of a promotion for you guys, right? Who is actually now actively raising at the moment? I think any investors out there listening, right, will be able to find you guys through MDEC, right? Yeah, and importantly is well, I think most people tend to read the media when they talk about, okay, this company raised how much or whatnot, but rarely people share about the number of investor meetings they have to burn through before you get the first term sheet, right? Anyone has that number in mind? Maybe that's the parting thoughts, and say, okay, what's your ratio? How many meetings you have to go through before you get one term sheet? Yeah, just for fun.
Yeah, for us, I mean, if you're looking at it from the very beginning, probably a couple $100 that we have knocked on. But I think with every door that we've knocked on, what we have gained is feedback from investors of what they're looking at, as well as what we could improve on, and with every door we knock, it just gets better until we get the term sheet. Yeah.
Right.
I think
Justin?
Yeah, for me as well, even at this early stage, it's, I think, must be 100 close, give or take, right? And I think, like Ian said as well, like the more doors you knock on, generally you start to learn a bit more, and you kind of make your pitch a bit better. You learn more about your business and what other people think. And you get a lot of feedback as well, which is really nice. You know, so because it is a full-time job for quite a while when you are fundraising. Like right at this very point in time, we're not, but we would be looking to fundraise towards the end of the year. So now it's really just focusing on business and gaining traction. But it can be sometimes demoralizing. I think one of the first offers that we got was for maybe 3 times more than we actually asked for. And it was really hard for us to actually like take a decision to turn it down because we felt it wasn't the right terms for us, right? So at that point in time, when you really don't have any options, and to take that decision was really hard. But in hindsight, it's not something that we have regretted. But yeah, it is hard, and you just need a lot of very thick skin.
Fumiko, what has been your experience so far?
All right. Yeah, we just started 2 months ago. Then this is the seed round, so still new. I mean, early stage. So we don't have enough track record. So it's quite challenging for us. And I only have a 20-30 experience to knock down in the investors. So compared with the other two, I think I'm still on the progress, and I need to more attack and try and open the door for the investor more. I found it not only me, I mean, all the founders as facing these issues, then to try to feel the challenging. And also as Justin also mentioned about it is almost a full-time job. I realized I thought it will be end 3 months, but it never ends actually. So it's almost become a full year job, and I really try to make balance between my operational work and also financial activities. It's simultaneously have to do it. So that's a very big challenge for me, and as a earlier stage of founders.
Yeah, I think precisely, because literally when I coin the word of full-time role is not an understatement. Yeah, because some of the portfolios that I've been dealing with and all that, the moment that they close an A, right? Before that is happening, the B has already started, and sometimes when the business is good, right, investors will keep knocking your door, and then you have to decide whether you want to like really push them away or you want to focus on the business. I think it's a really tough balance to strike, right? Because the regret that you don't want is that this pot of money goes somewhere else, and worse still, to the bank of your competitors, right? So in a way, all the best to you guys, and I think that's pretty much for this afternoon. And thank you so much for making time and share with us, your journey and your perspective in venturing into Malaysia, especially for fintech. And perhaps the key takeaway certainly is, Malaysia, may not be the largest country when it comes to the population, but the infrastructure is there, the legal framework is there, right? I think if you know what kind of agency or association for fintech, right? If you know them and you know where to go and seek for help, I think the community here is pretty welcome with an open arms. Yeah. So good to see that Justin also making a comeback here, make an impact to the country. And Ian, thanks for coming into Malaysia as well. Fumiko, needless to say, the trust of Malaysia to be your base, yeah, and your current home, right? So I think with that, I'd like to wish everybody all the best, in your venture, and probably we'll see you perhaps in the next fundraising round and so forth. We can have that conversation again. Yeah. So okay with that, and thank you very much. Stay safe, and hopefully we can get through this pandemic real soon.
Thank you, Syakir. Thank you, Justin. Thank you, Fumiko. As well as thank you, MDEC, Ryan, Bala, and Manwai.
Wow. All right. Okay then.
For having me. Good to meet you.
Thanks. Bye.
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 Thank you.
Bye.
Bye.
Hi everyone, I am Syakir, and I am the Senior Vice President of Business Operations at Wahid Invest, and concurrently I'm also serving as the country head for Wahid Invest in Malaysia. So if you've not heard of Wahid Invest before, we're one of the leading Islamic fintech companies globally, headquartered in New York, and currently present in the US, the UK, and Malaysia. Our experience in Malaysia has been amazing. It was a success story in terms of a Western company expanding into Southeast Asia, predominantly through Malaysia as our Asia Pacific hub. Wahid Invest is being a Western company, being an American company, we have limited exposure and limited networks in Southeast Asia. And today, what I'm going to be sharing with you is a short speech and sharing session on the topic titled Malaysia as a Hidden Gem in Southeast Asia. So I was with the company since the very beginning of Wahid's entry into Malaysia, leading the team in getting the licenses to operate our business in Malaysia, building the team and scaling it up to what it is today. And in the next 10 minutes or so, I'll be sharing a bit about the reasons as to why Wahid chose Malaysia as our Asia Pacific hub and as our first foray into an emerging market country. So I'll have a few reasons as to why Wahid chose Malaysia, and the first one would be for regulatory reasons. So besides these three countries that I mentioned where we are operational right now, the US, UK, and Malaysia, we also have licenses in multiple other jurisdictions. So we've actually dealt with many regulators beyond just Malaysia, the US, and UK. And what we found in this experience is that the Malaysian regulators are very advanced, especially in the space of regulating Islamic fintech or Islamic robo-advisory. And what I mean by the regulators being advanced and ahead of the curve is that they are very approachable, right? If you are also a fintech entrepreneur, you realize that facing regulators could be one of the most daunting tasks or daunting experiences that you may have, because well, their job is to regulate, and that may not be the easiest thing to deal with for fintech entrepreneurs or fintech companies. But our experience in Malaysia has been very, very pleasant. We dealt directly with the Securities Commission of Malaysia, the organization or the regulator is actually set up to facilitate and regulate the entry of financial technology companies into Malaysia. So, what you realize is that if you were to engage a regulator like the SC or even the Bank Negara in Malaysia, they do have a specific team looking at financial technology licensing or regulations or sandbox, right? So for us, we had direct relationship first with the digital team within the SC, which comprises of people who totally understand how financial technology works, and that understanding helps quicken the process of licensing, right? Because when you are innovating, when you are trying to make to launch something new, it may not be fully regulated at that point of time, meaning there are no exact frameworks or guidelines that will guide you in the process of licensing. So this is where the team that is specializing on digitalization or digital offerings in the regulatory bodies really help soften the discussions with the regulator. So that's one great thing. But specifically for the Wahid experience, this was further enhanced because Malaysia, I believe, was the first country to in this region that had a very clear regulatory framework for robo-advisory, or how it's called here is digital investment manager licenses. So we were the first entity to be licensed as a Islamic digital investment management platform in Malaysia, and the process was rather smooth because there was a guideline and a framework issued by the Securities Commission Malaysia to help guide you to prepare to get licensed as a robo-advisor in Malaysia. So having that clarity from a regulator was priceless for us, because there is less gray area, there is less confusion. All you need to do as a fintech is look at the prevailing guidelines that that governs your business model, comply to everything that is needed, and then go through the SC digital team, licensing team, and the Islamic team in the SC to get the final licensing process done. So that's number one. Regulatory wise, I believe Malaysia is ahead of the curve in terms of fintech regulations, especially one of the leading regulators in this region for fintech entrepreneurs and fintech companies. Number two would be the market. So in the Wahid experience, we are predominantly a US-based company with experiences in the US and UK. We do not know much about the emerging markets, especially Southeast Asia. So Malaysia was a soft landing for us into the emerging markets, and especially in Southeast Asia. And I'll explain to you why. First and foremost, Malaysia is not relatively large, if you compare Malaysia's population to, say, Indonesia, but there is a sizable enough rising mass population or rising mass affluent population in the country, which is, Malaysia is has a population of about 30 million people. So if this is your first entry into a big population country, Malaysia gives you that soft landing. It's not very large, where in countries like Indonesia, you're looking at onboarding, say, 1 million, 2 million clients a year because of the scale of the country. But Malaysia gives you something more manageable as a first entry into a developing market. On top of that, if for Wahid, we have an Islamic offering, and if you are a Muslim or you're targeting a Muslim client base, Malaysia provides that for you. As I mentioned, Malaysia has a 30 million population, 18 to 20 million of which are Muslims. So 18 to 20 million is a nice market size for you to test out new innovations, because you will be able to see the growth and get traction for some time before saturating the market. So in short, Malaysia has the right market and its fertile grounds to test innovations, especially so in the Islamic digital economy and Islamic fintech. On top of that, right, for us especially, as we provide an Islamic digital investment offering, the market is very well aware of Islamic products in finance. So the man on the street or the woman on the street, if you ask them about takaful, you ask them about halal investments, you ask them about Sharia compliant investment, I believe that they are, as a population, as a Muslim population, Malaysians are way more exposed to this compared to many other Muslim countries around the world. And I think this has got to do after decades of government push for this. You have Islamic universities like the UIA, like INSIF, USIM. So Malaysia has generated generations of graduates who are very well versed in the Sharia, and this trickles down to their families and friends who are aware about Islamic offerings. On top of that, you have incumbents, large Islamic banks in the country who has been doing very good work in the past decades, promoting Islamic finance to the population. So you're not coming into a country where people don't understand Islamic finance. So that makes things a lot easier for you to offer your Islamic offerings to the market. So that's number two. The market is fertile, and it's great for you to push out offerings to developing markets without you really facing a culture shock. It's definitely something interesting as a soft landing for Western companies or Far East companies trying to penetrate the Southeast Asian market. Number three, I would say, would be the availability of talent. So amongst most of the Southeast Asian countries that we have today, Malaysia is, I would say, one of the leading countries. So together, Singapore is there, Indonesia is there, but Malaysia is somewhere at the top in terms of fintech. And what it means is that there is an availability of talent, right? You have people who has gone into fintech, say 5 to 10 years ago in Malaysia, who's learned a lot about scaling a financial technology company. You have technology talent, you have UI UX talent. Talent is abundant in Malaysia. So that is great for us as we scale. You're talking about hiring 3 to 4 people at the start when you're in a licensing phase, all the way up to 10, 20, 50, even 100 in the next few years. So I believe that Malaysia has a sizable talent pool across all segments. You talk about technology, you can easily find technology talent. You also have, for us, in the Islamic space, Sharia experts, advisors, executives. There are, one aplenty in this country because of the institutions that I mentioned to you earlier. There's an abundance of interns who are interested in Islamic fintech space. We received, I think to date, hundreds of applications from interns, candidates that would like to intern with us. So there's an abundance of, human resources made available to entrepreneurs or fintech companies planning to expand to this country. The third point as to why I believe that Malaysia is a good soft landing for fintech companies in Southeast Asia is also the society that you have in Malaysia. So I mentioned it's a sizable population and all that, but the people themselves in Malaysia are very diverse, right? We put out an Islamic offering, but we do have clients in Malaysia who are not from the Muslim faith. So that tolerance and that acceptance of diversity is great, because you do not have a segmented society where this thing is for Muslim and no one else wants to try it. It's very diverse and nice and a beautiful harmony that we have in Malaysia, and it's good for fintech companies that are Islamic to try and expand their offerings to people not from the Muslim faith, and we really appreciate that about the Malaysian society. And secondly, it's about English as a language in Malaysia. So I think most people go to school and learn English, and English is widely spoken and understood in Malaysia. So this is really useful for Western companies looking to enter Malaysia, because you'll have your HQ sitting in the US or the UK or anywhere else in the world, and most of the time you use English as the language for business. And you'll find that language is definitely a very, very small problem in Malaysia, or maybe a non-existent problem, because everyone understands the language, and especially when you're hiring executives, managers, language barrier is almost non-existent in this country, and that facilitates business, that makes business easier to expand into Malaysia. And society is definitely one of the key points as to why we chose Malaysia to expand as the first country in Southeast Asia. And then the fifth point would be the cost of doing business. So the reality is as such, you want to expand into Southeast Asia, you're looking for a soft landing, you don't know if Southeast Asia is going to work for your business model or your team, and you do not want to invest too much money upfront, right? So definitely Malaysia, if you compare it to Singapore, the cost of doing business is way more affordable, right? You can rent offices in towers in Malaysia without costing a big hole in your company's pockets. At the same time, salaries compared to countries like Singapore in this region are definitely way more affordable for businesses. And all in all, when you put everything together and you try and understand the cost analysis, comparing to other major cities in this region, even Jakarta, what you realize is that relative to say Singapore and Jakarta, Kuala Lumpur is definitely a much more cost-effective way for you to enter Southeast Asia. And this is important because as a foreign company coming to Southeast Asia, cost definitely plays a big role into making that decision. And from Wahid's experience, we realized that especially from a payroll perspective, from rental perspective, Kuala Lumpur offered somewhat an unparalleled cost structure for us to test and explore the Southeast Asian market. The sixth point I have today is about government support and overall digitalization of the country. There are many countries who claim to be at the forefront of Islamic digital economy, of Islamic finance, but what I can safely say is that Malaysia has taken serious efforts through its government and the agencies under the government to really push the growth of Islamic digital economy. So Wahid has received a lot of support, not only from the regulators, but also from agencies like MDEC, and their Islamic Digital Economy Department that facilitate our understanding of this market, facilitate our entry, and also about spreading the word about Wahid in this country. So government support is really key because, as a startup, you have limited resources, you have limited networks, especially if you're foreign. Having that government support towards fintech or Islamic fintech is, to me, very key for a foreign company to expand and offer its services in Malaysia. The next point I have is about the ecosystem. So no one fintech, I personally believe no one fintech can go into a country and just scale, right? You need the ecosystem to be there for you to scale. For example, I'll give you a simple example on this. Wahid is a robo advisor that has a mobile application, right? You'll need things like payment gateways, you need custody services, you need brokerage services. I feel that relative to most of the countries of Southeast Asia, Malaysia has got a solid ecosystem that is sufficient for the growth of financial technology in the country. You will find that payment gateways are very advanced, pricing is very competitive, and people are very used to online channels of payments. So that was one key point as to why the ecosystem is important to enable your financial technology services. On top of that, the incumbents, the financial services institutions that have been around for decades, they are also digitalizing. So as they digitalize, you open up the possibilities of open banking, of having APIs, and these are going to be very key. Of late, you see a lot of advances in the insurtech space in Malaysia, and I think a lot of it has got to do with how the incumbent takaful and insurance companies have actually evolved and developed technology solutions, especially in their APIs that enable insurtech companies to build on top of. So moving forward, I foresee more and more digitalization efforts being done by banks or other non-bank financial institutions, and this will bode well for the entire fintech ecosystem and for future entrepreneurs coming to Malaysia or starting up into Malaysia to tap on in building their financial technology startups or businesses. And all in all, I believe that I've given a number of points as to why Malaysia is a great hub, providing a soft landing for fintech entrepreneurs. But there are also some challenges, right? As I mentioned, Malaysia is not entirely the largest market in this country, but it provides you a soft landing. So at Wahid, we named Malaysia as our Asia Pacific hub. And moving forward, we are looking at serving the entire region from Malaysia because we believe that we can scale our team in Malaysia because of the abundance of people with the expertise that we need to scale up our team in the country. At the same time, we have very flexible and understanding regulators who understands, that the world now is borderless, right? Technology is borderless. You have trading platforms in Europe serving clients in Malaysia. You have exchanges or brokerage houses in Singapore serving Malaysia, and Malaysia can also serve the world. So this understanding is very much aligned between myself, at least, and I believe many other fintech companies and the regulators, that moving forward, Malaysia is going to be the hub in this region or for the world, especially for Islamic fintech and finance, because Malaysia has such a great head start in this industry, and I believe that it will do so moving forward. My parting word for fintech entrepreneurs or fintech companies looking to make Malaysia the base for Southeast Asia is that all in all, it has been a very pleasant experience from Wahid. We've had really solid hires that we've made in the country that we're very grateful for. And the market has been overwhelmingly supportive of innovation, especially in Islamic finance. People have been asking for innovation and we've delivered. And I'm sure, with more of you coming up with solutions and innovation, it will only mean well for everyone in the ecosystem that there's innovation, there's more customer options, and this will mean well for everyone in the country and also for the world, that Malaysia continues to become the hub for Islamic digital economy and Islamic finance, Islamic fintech for the world. And that's it for today. Thank you, everyone.
Hello, everyone. My name is Chee. I am the co-founder and the CTO of MoneyLion, the digital platform in the US. Today, thank you for attending my presentation. And here we go. So let me give everyone a little bit of introduction to MoneyLion. What MoneyLion is we are America's one leading digital financial platform. And what we want to do is to provide financial access to all Americans without a lot of discrimination against potentially the the lower income people or the rural people. So what our product generally being divided into 5 pillars: the advice, investing, banking, salary advance, and credit building. So we generally think that banking, as it is right now, is kind of broken, and it has a lot of fees, is elitist, selfish, dated, and a whole bunch of not so nice adjectives. And what MoneyLion is, we built the tech stack from ground up, and all of our loans are being approved almost instantaneously with 99% automations. And we are a big AI company. We use a lot of machine learning models, instant transfer rails, and we pride ourselves in being able to prototype to delivery of a product generally in a few months' time. Our platform are built from ground up to be microservices with all the banking services that you can see within that are generally existing within most financial institutions, including payments, money movement, rewards, and decisioning. So we are an extremely data-driven company. At this point, we have more than 13 million connected bank accounts, and we are integrated to more than 100 data sources. At any given day, we ingest more than 1 billion transaction data points per day, and with that, with our AI algorithm, we make more than 3 billion inferences and predictions per day, and that enriches the user's data to a point that each user can have up to 14,000 variables or information about them, and these are not the rows, and these are the columns of data. So how do we use predictive AI? We use it generally in 5 departments. For the first one is insights and advice to our users. The second one is credit worthiness. We predict credit worthiness. The third one are payments. We use them to predict payments, different type of payments, when to collect them, and stuff like that. Fourth one is fraud and security. In financial institution world, fraud and security is extremely important, and the fraudsters are generally evolving very fast. So AI is the only way that we can catch up with them. And operations is in customer service. We have a chatbot, and we have a predictive type of answering of what the user wants. So let's look into a couple of use cases of exactly where we use predictive AI. The first one is obviously credit scoring. One of the major ways that companies like us make money are through loans. So and when we are dealing with the last swath of population, sometimes credit scoring, the generic credit scoring will fail. So what we have to do is to develop our own AI-based credit scoring. The second one is to predict the lifestyle of the users, and that will allow us to recommend our product timely, and we are able to personalize our product specifically for the specific lifestyles of our users. So we want to talk about the AI organization that we built in Kuala Lumpur, and the general product engineering organization as well, and how we evolve into what we are today. So Kuala Lumpur, since day one of MoneyLion, has been our AI and technology hub. We have currently we have more than 200 engineers, technologists, data scientists, and in our KL office, 97% of them are Malaysians. and they came from like the top educational institution. The key responsibilities, including like about 95 or 90% of our engineers are all based in KL. 100% of our analytics and AI people are based in KL. And the KL engineers also support infrastructure and cybersecurity as well. So the AI team in MoneyLion. So the AI team are broken into 3 main departments: the data engineering department, the data science department, AI engineering, and all of them are being supported by a service delivery organization. And this is the general org structure within the AI team in MoneyLion. And this is the data science department, and the data science are being organized into very specific product aligned parts that support each of the product that we have. And sometimes they are cross-cutting or platform level grouping as well. For example, something like fraud will be a platform level grouping. Some of our product require a lot of analytics, and for our bigger product, we have more than 10 data scientists to support one product. Our data engineering organization broken down into data warehouse, data governance, and data lake. And just because we have such a big data science operations and also reporting organization, we need the data to be extremely real time and extremely well defined. And you have the AI engineering team. The AI engineering team is a very special type of software engineers, where they don't only know how to build the best software, but they also know a lot about machine learning as well, in such a way that they are able to build the best software that works with the predictive analytics that came out from the data science team. And you have the service delivery organization, which consists of a lot of AI product managers, AI PMs, we call them, and program managers, and process managers as well. So this is the department that ties everything together in such a way that all the product and processes that we develop will get to our users. So that is the general nutshell of AI team in MoneyLion today. However, we did not start like that. We were 8 years ago, when we first started, we were a startup. Obviously, we don't have a lot of money, and hiring was low. So what happened is that we first started with two departments: the data science and product engineering department. And we have 2 data scientists and maybe 3 product engineers at the time. And all data are transactional, and it goes into a single MongoDB instance. And the data scientists have to do everything from model development to data engineering, to business analytics, dashboard, to model deployment as well. And the problem with this kind of structure is that this kind of transactional data are very different from analytical data, and thus there were a lot of discrepancy when we created report at the time. So we got a little bit smarter, and we put in AI engineering, where after we realized that the data scientists are very smart people, however, they are not the best software writer ever. So we created an AI engineering department so that they can write production quality software to complement the predictive analytics that the data science people are doing. So so why do we create an AI engineering team? Firstly is to deploy and productize all the predictive models that we have. And they also create tools for faster model deployment. They standardize the data set that are being used by each of the models, and they reduce the time from ideation to deployment for all of our AI models. And we run into DB problems because both of our transaction workload and analytics workload are from the same database. And the problem is that when the data scientists are sometimes running heavy query, it will affect the performance of transactional database. So what happened is that then we added one more team, which is the data engineering team. So what the data engineering team is that they do specifically, firstly, the ETL, extract, transform, and loading of data. And what they gave us is we started to have an analytics-driven repository of data. So in such a way that our applications will just access our transactional database, which is MongoDB, and it will be real-time sync into a cluster of Elasticsearch. Elasticsearch is great because you can do a lot of text searching, and when the data scientists are working on Elasticsearch, and it will not affect the performance of MongoDB. So the other thing, what we wanted to do is also to normalize the data, because when an application is designed, usually we forego the how the data is being ingested eventually by the data scientists and also by the reporting people. So in order to do the normalization well, we introduced one more database, which is AWS Redshift, a data warehouse type of database. So the data engineering people also do the syncing from Elasticsearch and normalize the data into AWS Redshift. And with this AWS Redshift data warehouse, it greatly democratized the analytics. A lot of our users are able to do self-service analytics, and we subscribe to this service called Periscope, which is a dashboarding software service. And we built a lot of dashboard for every corner of our businesses. And at this point, we have more than 500 dashboards that are being visited on a daily basis. And just because the company grew and we have more type of products, and we realized that different type of products do have different data structure. So we empower each of the product part to have their own databases. So at this point in MoneyLion, we have MongoDB, we have Redshift, we have MySQL, Postgres, Kafka, S3, and everything that you can think of. And with this, we have a better distinction of roles and responsibility. The data science people are mainly doing data exploration, predictive model development, feature engineering, model interpretation, research, ML ops, experimentations, and the hardcore, the more traditional data science stuff. Whereas the data engineering people are doing a lot of ETL framework. They do data governance as well. They make sure that the right people have the right access to the right data without, and obviously not everyone has access to all of the data, which is extremely important in a privacy-driven organization like ours. And they maintain the data lakes and warehouse for the analytics department, and they also help to maintain the data sources for the product engineering people. And they constantly have to refactor for optimization in a very data-driven organization like ours. And then you have You have the AI engineering people who develop infrastructure for model development. And that is extremely important because the concern for developing AI-based software or a predictive analytics software is quite different from a regular software development concern. And these are the group of engineers that are highly trained for it and highly experienced in it. This leads to faster deployment of predictive models, and they also develop mechanism to monitor the model performance from a software infrastructure standpoint, and also from the predictiveness of the model standpoint. They automate a lot of test scripts, and they monitor outputs and version different type of models and different type of data. Whereas the product engineering people are the people who actually build the product. Those are the I guess the more traditional software engineering, where they deal with product roadmap, features development, feature release and maintenance, infrastructure, DevOps, stability, and reliability. And all of these groups are being tied together with by the AI service delivery people. And what the AI service delivery people can do is that it makes the team a lot more scalable. So you don't have bottleneck within the AI team. It also makes the performance of the AI team a lot more measurable. So these are the people that measure if the data scientists are producing a good amount of production level predictive models, and also the data are being used correctly. They also set up a process whenever there's a new project that requires AI support. The AI PMs will start from the beginning to have the business people to answer the right questions and being to drive it all the way to the delivery of the product and the constant update of the product as well. So, and this is the general AI service delivery process snapshot that we have in MoneyLion right now. I know it's a bit too busy, but as you can see, there are a few phases here. Comes from ideation, scoping, research and solution design, development, deployment, and monitoring. But so this is in the order. But however, most time than not, when you arrive at scoping, sometimes you might have to go back to ideation, and for long running process, all of these phases are actually going on at the same time. And this is the service delivery team structure, where you have a few directors of data engineering, and these are project specific type of project aligned teams. And then you have service delivery PMs that potentially manage a few smaller projects at the same time. So yes, this is the general quick explanation of the evolution of MoneyLion's AI team in Kuala Lumpur, and I hope that you learned something from this talk, and thank you very much.
Hello, I'm Herston Powers of 1982 Ventures. I'd like to thank the Ministry of Communication and Multimedia of Malaysia and MDEC for inviting 1982 Ventures to participate in Malaysia Tech Month. To our friends, family, and investors in Malaysia, hope you are staying safe, and we hope to see you soon. We'd like to get started with this presentation about the Fintech opportunity in Malaysia and across Southeast Asia. A little bit about 1982 Ventures. 1982 Ventures is a Singapore-based MAS licensed registered venture capital fund manager. We're focused on seed stage. So we're investing in startups at the earliest stage of their life. We're targeting over 10x returns and open for new investors as we've just hit our first close. We are focused primarily in fintech, and we invest across Southeast Asia, including Malaysia. My partner and I have been doing this the past 5 years, and we've had experience running the strategy. Our asset class is very attractive. It has the ability to generate very strong investment returns and generally uncorrelated to the market. Venture capital funds provide access to high quality institutional investment opportunities that you would not necessarily find as an angel, family office, or corporate. Beauty of having a small fund is that our investors and our founders get direct engagement with the decision makers, myself and my partner. Our current portfolio speaks to our ability to source the best fintech companies across the region. Here's a selection of just a few of the names that we've invested in. We've sourced or led half of these deals, and we've been invited to oversubscribed rounds. We give our investors access to these portfolio companies, whether it's from an investment perspective or a partnership perspective for their core business. Fintech in Malaysia is a massive opportunity. We were inspired by the open call for foreign VCs to bring investments and our knowledge to Malaysia. Malaysian families, corporates, and investors are looking for a partner with a proven fintech venture capital track record. With that, one of the largest Malaysian publicly listed corporates has committed to our fund, and we look to onboard many more partners from Malaysia as we are set to increase our investment pace in the country and open more partnerships. We provide access to the best investments across Southeast Asia to these groups in Malaysia, and we provide our expertise for investments locally. The Malaysian fintech ecosystem has largely been overlooked. It's been overshadowed by markets like Indonesia, Singapore, and increasingly Vietnam. We believe there's a potential to attract more capital to local Malaysian startups with the supportive ecosystem, like the partners from MDEC, ourselves, and the people that we have on the ground to make sure that Malaysia is not overlooked anymore. We believe Malaysia is well positioned to build off what has been successful in other markets and obviously launch localized products and services fit for the financial services needs of the Malaysian citizens and its corporations and SMEs. Fintech, as you know, and as you will see, is a once-in-a-lifetime opportunity. And we believe investing at the seed stage, at the start of many of these startups, is the best place to invest. Everybody knows the great statistics of Malaysia, the smartphone penetration, the internet penetration. Now it's time to make the leap and start tackling financial inclusion issues and providing more financial services in a tech, digital-first way to everyone. Let's talk about the fintech opportunity. As mentioned, it's a once-in-a-lifetime opportunity, specifically in Southeast Asia. We have 500 million consumers waiting for financial services. And in our view, fintech will power Southeast Asia's growth engine. For the last 5 to 10 years, the story's been told by ride-hailing, e-commerce, online travel, and online gaming. Those companies have done incredibly well. In our view, the next 5 years will be the years where fintech takes the stage in Southeast Asia. We believe the next set of unicorns in Malaysia and Southeast Asia will come from the fintech sector. This isn't a new thought. In every other market around the world, fintech companies are the most highly valued VC-backed companies. Whether it's Stripe in the US, Klarna and Checkout.com in Europe, Nubank in Brazil, Ant Financial in China, Paytm in India, the largest companies have come from the fintech sector today. Southeast Asia, we're not there yet. None of these business models have come to scale in the same way, but we know that this is the future. It's a classic story. We have rapid urbanization, high technology adoption, and some of the highest mobile and smartphone and internet penetration rates in the world. Digital commerce and e-commerce is growing faster in Southeast Asia than any other market in the world. Financial services must catch up to meet the demands. And we believe we are just 10 years behind China and other markets when it comes to fintech. So the time is now. Along with that, the investment into fintech continues to grow in Southeast Asia at a very nice pace. But if you look at the share of investment from venture capitalists going into fintech in Southeast Asia, it lags way behind China and the rest of the world. 1982 Ventures is here to fill that gap. We see the opportunity, and we want to make sure that the best fintech founders have access to capital. The ecosystem is getting better. We're seeing larger and larger funding rounds for fintechs. At the same time, fintech and financial services is a highly acquisitive sector. There's a lot of M&A, trade sales, and consolidation that happens in the fintech space. It remains one of the most active sectors for exits for early stage and VC investors. We see as early as Series B, C, and D, early stage investors get exit opportunities. And the acquirers of these companies are the unicorns we know today, the Grabs, the Go-Tos, the Razors, and increasingly, technology companies from the West and from China. But let's talk about some of the business models that excite us today. We've invested in a financial API player called Brick that launched in Indonesia and looking to come to Malaysia. If you know of the company Plaid, that is what Brick is. Brick is the Plaid of Southeast Asia. Funding is a Vietnamese buy now, pay later. Let's call it the Afterpay of Vietnam. 3 installments, no interest rate, first installment due at checkout. Very great local founders, and this company is moving fast. It's a hot segment for fintech, and we believe it's fit for purpose for most Southeast Asian markets. Homebase, a home financing alternative for the underserved and underbanked looking to buy their first home, whether it's a millennial couple, entrepreneur, or anyone that's just not being serviced in the right way by traditional FIs. Homebase allows people's dreams buying a home or property come true. Infina, another Vietnamese startup focused on the retail investment space. They're the Robinhood of Vietnam. They're allowing everyone in Vietnam the ability to invest in their future and save for their future by giving them access to financial products and to participate in a very dynamic and growing stock market. We move to NextPay in the Philippines, an all-in-one banking solution for SMEs. This allows SMEs to pay their employees, settle invoices, all without having to go through the hassle of going to their local bank branch. Wagely, a very interesting company from Indonesia, doing earned wage access, looking at Malaysia as a market that partners with large corporations to provide a financial wellness benefit so that their employees can access their wages on demand for a small transaction fee, no interest charged, and allows to alleviate some of the financial stress of many people living paycheck to paycheck. It helps eliminate the need for employees to ask their boss or owners for loans, and obviously helps eliminate the need for individuals seeking relief from loan sharks and predatory lenders. That's what Wagely does. In our view, the future is very clear for Southeast Asia. The opportunity is massive. The time is now to invest into fintech, not just in Southeast Asia, but definitely in Malaysia. We'd like to partner with anyone who's interested in our mission to become the best performing seed fund and to positively impact the future of financial services across Southeast Asia. I'd like to thank you for allowing 1982 Ventures to participate in Malaysia Tech Month, and please feel free to contact us as we love to talk about how we can support you. Thank you.
Thank you, sir. Thank you, Gopi, and to all our panel members for that interesting conversation, discussion, and presentations. So we'll now be moving forward to our next session of the day. We'll begin very, very shortly So click join session and also complete the survey for us to continuously serve you better. See you in a bit.